Time for the latest earnings outlook now with Research Director Shiraz Mian. We're in the thick of Q1 earnings season now. Shiraz, let's take a quick peek at the scorecard here as far as earnings growth is concerned. How's that coming in?
It's coming in very good, in fact. The preseason expectation was that the S&P 500 earnings in the first quarter will be modestly negative. In fact, we were looking at something close to 2% negative number on a year-over-year basis. We have a decent sized sample now. I mean, we still have a large number of companies still reporting, but we have about 30 plus percentage companies reported as of the close of Monday. Mm-hmm. And the growth rate is tracking above 7%. So it's a very good performance relative to preseason expectations. In fact, if we look at these same companies and look at this stage in the fourth quarter, mm-hmm. Their performance in the current quarter is way better than what they did in Q4 and also Q3 of 2011, which were really strong quarters.
Yeah.
Q3 was a really strong quarter. Q4 was not as strong a quarter,
right.
But the expectations were that Q1, the current reporting quarter, would be significantly weaker than those quarters, and that is proving not to be the case.
All right. What about the story on margins? What's going on there?
Margins, so where's the growth coming from?
Right.
It's a combination of top-line gains and some margin expansion. Now, the early going, as you know, is really heavily tilted towards finance, and finance has been coming out with very strong numbers this quarter. So on an aggregate total basis for the S&P 500, margins have expanded a little bit relative to the first quarter of 2011, but most of the growth is coming from top-line gains. So yes, margins have held up in the aggregate. Now, when you get inside at the sector level, you have variations, but overall, there is year-over-year improvement. Once you take finance out, then all of these numbers look a lot less impressive. Whether it's the growth numbers, whether it's the margin numbers, whether it's the top-line numbers. So finance has been the big driver, but finance is the only sector which has a sizable enough sample at this stage with us too. As the season progresses, particularly by the end of this week, we will have a much better sense of some of the other sectors as well.
So still too early to name any other standout sectors besides finance at this point, right?
That's true. If I have to pick on anyone, I would say basic materials appears to be tracking a bit weaker than preseason expectations, not by huge margins, but it's coming up a bit more short or weaker than what the estimates were getting into the earnings season. But we still have a number of reports coming out later this week from that sector as well.
What about laggards at this point?
That's basic materials is the laggard.
Oh, okay.
So they were their growth numbers, the margin numbers, the beats, the surprise elements. Those are all tracking a little bit shorter.
What about expected laggards? You must have had some preconceived notion going into the season that some sectors would not be good performers.
Do you know? I've been surprised by finance.
Really?
Finance, there was negative growth expected for Q1. As I mentioned here, the last time I was here, I mentioned that the expectation for the coming quarters was for positive aggregate growth for S&P 500 earnings, and the expectation for finance was a big driver of that expectation, those estimates and projections, and so I'm positively surprised by as good as the finance numbers have turned out to be.
You mentioned beats a moment ago. I understand from what I'm reading that the number of beats this season's at a very high level. Talk to me about that.
It is. The typical number of companies or proportion of companies that would beat expectations on the earnings front is around 2/3 to 70%. So as I mentioned, we have only about 31% of the reports already in, but we have close to 80% of companies beating expectations. Now, I don't want to reach the conclusion from that number that we are seeing another ramp up in earnings growth and earnings expectations.
Right.
I think it's a function of how low expectations had gotten ahead of the earnings season that we are seeing these outsized beats. So the about 79+% of the companies are coming up with positive surprises.
Interesting. Well, Shiraz will be back here on video a few times during the Q1 earnings season to update us on the earnings scorecard and how things are faring out as far as companies that have reported and sectors that are being represented is concerned. But in the meantime, if you want a printed version of earnings trends, all you have to do is go to Zacks.com, because every week he updates his earnings trends commentary right on our website, accessible off of our homepage. Just scroll down until you see his picture. Click on the link that's there in headline form. With Shiraz Mian, I'm Terry Ruffalo.